Welcome to Money Convos, where we discuss personal finance and investment tips. We're committed to helping people create wealth and achieve financial freedom. Follow us on Twitter, Instagram, Clubhouse, and Facebook, and subscribe to our YouTube and podcast. All right then, let's head into today's conversation.
Hi guys, how you doing?
Oh, hello, Elikem. Very cool, Elikem. How you doing?
I'm great, my brothers. Charlie, I just got some
How's the weather?
food. Charlie, the weather is not good, but how good one? The sun is shining, but
Because I've been following it.
the sun is shining, but 0 degrees Celsius.
Charlie.
With the inside, I think the weather has gotten to me a bit. I've got a bit of a cold. Yeah.
Oh, sorry.
How does that even work? The sun is shining and we have 0 degrees Celsius. Anyway,
Charlie,
I've forgotten.
So we need the geography students to come and explain.
That's what I say. I've forgotten my geography even.
Because I can feel like if I put my hand in the sun, I can feel that it's hot. But once you enter the shade small, no, Charlie, you freeze.
Then I would do.
You understand it, son. Anyway, and how you guys also doing? Prince, it's been a minute. How you doing?
I'm doing good, Elikem. I'm doing good. I just chalk for my corner.
Still in the office or home yet?
Yeah, I'm still at the office.
Okay. I see. Cool. Lee, nice to see you in the audience. Feel free to join us up if you'd like. Yeah, today's conversation, let's ask us anything. Today we are trying to keep it open, no particular topic in mind. Just answer questions that have come up or questions that people will have for us. Anything related to money, insurance, investments, retirement, budgeting, saving, anything. Questions about banks, anything at all. That's what we are trying to discuss today. So if you have any such questions, do feel free to bring them up. Either you raise your hand to speak or you send us a voice note or a DM on WhatsApp or here on Twitter, Facebook, anywhere. Just join in on the conversation.
Elikem, the Silicon Valley, what happened to it?
Silicon Valley Bank. Charlie, it's an interesting thing, yeah?
I was listening to it, but I was rushing, so I couldn't quite hear CNN talk about it much. But since you are in the country, maybe you can give us some information.
Okay, so long story short is there was a run on the bank. What happened is what happened with them is they were operating business as usual, and during COVID there were more deposits, right? So they had more assets, and they had more cash that was deposited, and they had to invest the money. Now, some of the things that they invested in were U.S. government treasury bonds and bills. When you buy a bond, what you want to pray for is that the interest rate should to go down, because the value of your bond is inversely proportional to the price of the to interest rates. So when interest rates are going up, the value of your bond is going down. When interest rates are going down, the value of your bond is going up. So once you buy bonds, you want the interest rates to go down so that your value can go up. So on the books, so as with any bank, they collect money from depositors, right? And then they invest it. So they invested it in these treasury bonds. They didn't anticipate that interest rates will go up so high. So assume, let's say, 100 million in deposits, and they've invested, assuming all in bank treasury bonds. As the value for the depositors is still 100 million, but as interest rates are going up, then the value of those bonds are going down to 90 million, 80 million, 70 million, you see. So then there's a mismatch. There are
Okay.
losses that will cause a mismatch. But even those things hadn't crystallized just yet. What happened is a lot of the investors started saying, "Oh, the way the economy, the depositors started saying that the way the economy is going, they need their cash. We see all these layoffs and things. They started withdrawing so that they take care of their expenses and all that. So as people started withdrawing, then even more institutional players who invest in some of these startups, like private equity funds, venture capital funds, were starting to nudge their people more that, you know what, see your money at SVB, go and withdraw it, because we don't think these people, they would have the money in full when you need it. So they were just
Okay.
hinting. They didn't say it so aggressively, but they were hinting at their connections that, hey, go take your money out. And SVB was able to withdraw the money, was able to honor withdrawals up to a certain point. There was even one day that up to $40 billion was withdrawn in one day. Charlie, can you imagine Ghana, one bank
Okay.
allowing withdrawal of 40 billion?
Charlie, thank you.
And SVB was the 16th largest bank in the US at the time of its collapse. So no bank, in fact, no bank, no matter how well they are performing, how safe everything is, no bank can manage a run on the bank, because the money has been invested. If everyone wants to crystallize it, you are going to tell the people who have taken loans that, hey, bring me all my money back, or the bonds, sell them all. The more now, when you start selling the bonds at those bad values, you start crystallizing your losses. So the question is, how do you show up those losses? So after a couple of hours or a couple of days, they were like, you know what, let's close, because we can't handle the run that's coming on us. They have to sell the bonds at losses, and there won't be enough money. They try to raise capital, try to go get people to lend them money or buy shares in the bank so that they can use that money to pay depositors, but they didn't raise enough, and then they threw in the carpet. They threw in the towel. Threw in the towel. The regulator stepped in. The regulator has taken it over. So yeah, that's what's happened.
Okay.
It's not like there's been fraud. People will say, okay, where there's questionable action is, people will say, why did they buy so much in government treasury bills and bonds? Why didn't they anticipate interest rates were going up? Actually, this is the work. There's risk. If they have so much deposits, what can they do?
Right.
They have to invest it one way or the other. So in a nutshell, that's what's gone on with SVB.
Oh, all right. That's fine. That's fine.
Another development with it is, and I'm sure Ghanaians can relate. So there's a depositors protection insurance. In Ghana, we also have something similar. I think the limit is the limit for let's see, the limit in Ghana, I've forgotten what is it 6,000 or 12,000? I've forgotten. But in the US, it's, if you have depositors insurance, it protects your money up to 250,000 per person per account. So you would think, oh, it's fine. But a lot of these entities are businesses with hundreds of millions in their accounts, even individuals with more than 250,000. It's Silicon Valley we are talking about. There's money there. So I think the stats I was hearing is 90% of their accounts are above that 250,000 threshold. So if they go by the letter of the insurance policy, a lot of people still have problems. So then they came out to say, you know what, they'll use that insurance to take care of everybody. Nobody will lose their deposits. And it's not taxpayers funded. This is an actual insurance fund that had been building. Banks had been paying towards this depositors insurance. So it's not taxpayers' money that they are going to use. It's just that it's going to really deplete that insurance fund a lot. So they will have to work hard to rebuild it. At least it's not a 100% Ghana situation like we faced a couple of years ago.
So you see how sometimes when the heat of the time comes, insurance comes to play to cushion some people and even the economy.
Exactly. Exactly. Prince, I think there's some noise in your background. If you could step aside
There's no inside my
for
background.
us,
Sorry.
that will help.
Yeah, let me step up.
Yeah, but as Prince was saying, in tough times we can rely on insurance to cushion you, and that's what the depositors insurance in the US has done for the customers of SVB. They were saying
Okay, thank you.
this aggressive measure was because if SVB collapses and people lose hope in the will lose faith in the system, and that's the main problem that the main concern that they were facing and they wanted to resolve.
Oh, okay.
All right, that's a good question, Prince. Got the ball rolling on today's session. Today is ask us anything at all related to money, anything, even if it's a topic we've discussed in the past, questions that people have asked you, questions that you've been wondering, anything at all. Let's just have a discussion about it. Raise your hand or send us a message, or reply to the tweet, and let's get to talking. Mimi, welcome. How are you doing?
Hello, I'm doing fine. Can you hear me?
I can hear you, but it's a bit shaky.
Okay. I'll have to manage the situation.
Okay. All right. How's everything going? Enjoying your week so far?
I don't even know if I should say this here, but I I was doing the exercise thing and
Hello?
hello, can you hear
Yes, you said you were doing the exercise thing.
And I stopped. I just noticed that I've gained the most weight I have like in years. So I'm
I'm sorry, I don't mean to laugh.
the situation is some way.
It has gotten worse.
I sound like I'm shaking. I think I'll be permanently working on the treadmill from now on.
Some people have treadmills. Some people have standing desks. Some people have a treadmill under their standing desk. So maybe you should get one of those.
Charlie, I think I'm enjoying too much because I don't understand where this thing is from. Anyway, let's not talk about my problem.
But it's all good. It's related to your goals for the year. So you can see that even though you're backsliding, you're working hard now.
That I can't disgrace myself. I had a program at UPS. So as part of my goals for the year, I decided to I told someone to take more pictures. Peter, I don't know if you remember him because he was also there. And he took the pictures and sent it to me today. I'm like, nah, this is terrible. So I just came to stand on a scale. And that's where I saw the result of my my
So
weight.
you broke the scale, eh?
Charlie, like I haven't seen anything. I'm sure if I tell someone they'll insult me, but to me, this is like my biggest ever. Minus pregnancy though.
That's interesting. We wish you all the best. Let us know. Adam can get you some dogs to keep you on your toes. Dogs that will chase you around if you need motivation to run.
At this point, I don't mind. Adam, sort me out.
Fit farm.
Interesting. Okay. All right. Let's see. So so we have this topic at hand. Does anyone have any questions they would like to ask? And Lee, welcome upstage. Nice to have you here as always. Perhaps any questions that people have been asking you has been on your mind for the longest time. Just raise your hand and I would invite you to speak. I think Adam wants to go first. So Adam, go ahead.
Yeah, I would like to find out about the treasury bill situation as we have it now. We know recently government rejected all bids, and then subsequently when they did the reissuance, I think the rate fell to about 20% or so, thereabouts. So I want to find out, with inflation today being at 52% or something, how do we I juxtapose the two, with inflation being around 50 something percent, and then treasuries going for say 20%. Is it still a good option to invest your money in? Thank you.
That's an interesting question. So about treasury bills, I guess let's there are various sub questions to what you're asking. So first, what's going on with treasury bills? Is the government honoring treasury bills as they said they would? That's a good question to ask first. Mimi, how have you seen the treasury bills seen? People are getting their monies on maturity, right?
Well, I haven't heard anyone complain about Treasury bill, even though some people are skeptical, given that it's the same Akufo-Addo and his relative. However, it was expected that as we deal with the domestic debt exchange issues, Treasury bill rates would come down. And so I think that is what is happening. And I think it has even taken a bit of a while. I thought it would happen earlier. And so that's what is happening currently, because, I mean, if government does not have money to pay and is asking bondholders to sacrifice, why would they be paying 35% to Treasury bill holders? And if you look at the situation, they have the power, because really there aren't so many options. So I'm sure even with when it was 20, was it 24 or something? It was even oversubscribed, if I'm not mistaken. So it's not like there are a lot of options. I'm sure people would still buy these treasury bills. And then also, I think that it's important that the rates drop, because it also affects the lending rate. Remember that now banks were lending at 40% and all that. So if you're a business taking this money at this high rate, you would definitely pass it on to your customers, which can also affect inflation. So I feel like as rates reduce and money becomes cheaper, it can also affect the inflation rate downward, even though there will also be that argument that people can borrow more and spend more. So I don't know. That's what I think from my end.
Cool. And I'm largely aligned with what you're saying. Interest rates should be coming down. Ideally, we would like interest rates to be as low as possible. But now looking at what exactly is going on, talking about the oversubscription and what are people's options. I think government treasuries, despite the default, despite uncertainty, people would still have some level of confidence. Not to sound too arrogant, but sometimes you ask, what's the alternative? And a lot of people will be thinking about that. What's the alternative? It's true that there has been a default, but I think people still have some confidence in treasury bills, so people can invest in there. It's really hard to tell. When people ask me lately, I just say, you know what, wait and see. Leave your money in cash in your savings account. Just give it a couple more weeks and let's see how things will progress. I believe was yesterday Prince shared news of cocoa bills maturing and they were paid. You know, at least this starts to give confidence. The last time there was a cocoa bill maturity that it seems the payment was reversed, created a whole lot of chaos. So as people start seeing payments being honored, there'll be some confidence. And I think it's with these restructurings being done, the idea is to make things more sustainable. And if things are more sustainable, you can expect that there will be stability into the future. So I think treasury bills are still a good option. If you have a better option, fine, you can consider that. Otherwise, yeah, I think it's okay. Adam, what do you think? Is there a satisfactory answer?
Well, yeah, I think like you said, T-bills, there are not really any major options for investors, so they are stuck with it. But looking at it, it doesn't seem to be it's not the optimal solution to our problems now, but it seems like we are stuck with it. That is how I feel, because if inflation continues to remain at that high level, then it means that we are really losing almost half the value of our money, despite the fact that we are investing. Like, that is the angle from which I'm looking at it. So I feel a lot has to also be done to ensure that inflation rates also go down, and not just looking at just interest rates going down without the corresponding match in inflation rates going. So whatever other forces are causing the inflationary rates to go up or to remain that high and not drop as much as we want them, I hope they are tackled, so that at least when we are dealing with a low interest rate environment, with a low inflation environment, that's, I think, is the perfect thing for the private sector and individual investors too. And in fact, the government itself also have a lesser debt bill to be dealing with. So I think I think it's also part of a way of everybody having to share in the burden. So I think it is what it is. Yeah.
It is what it is. Interesting. Okay, I have another question coming through, courtesy of Dennis. He was in the audience, but I don't see him here again. But yeah. So this question says, what does a realistic budget look like? Mimi, I'll start with you on this one. A budget, madam. What does a realistic budget look like?
Saying is actually the budget, madam. But anyway, I think a realistic budget is a budget that reflects your life. The reason why I'm saying that is, if the budget reflects somebody else's life, you are not going to live within it, because your needs will then be met, and that's when you have your tendency to take debt and the rest. So it should reflect your life, but at the same time, that doesn't mean you should be doing anything anyhow. It should reflect your priorities. So there are so many things you want to do. What is most important to you? Make sure your budget focuses on that. You can still use the rule of thumbs and those guidelines, or create your own format for spending, so that you make sure that you are saving every month. You are spending a certain amount on maybe needs, wants, whichever way you want it. But at the end of the day, make sure that what is in your budget reflects you, your priorities. So that's what I would say.
Okay. It should reflect your priorities. All right. I think what I will add to is a realistic budget makes it very clear what you can afford and what you can't afford. Some people are making a lot of money and thinking they can afford a lot of fancy things. No. I would say, picking up from the richest man in Babylon. The richest man in Babylon. Start looking at it from the point of your after-tax income. Pay yourself first. Put 10% aside in an investment. That's, if possible, this investment should be like your get rich investment. Another 10% should go towards maybe future expenses or wealth building or something. All right. If you can put outside 2%, 20% in total that you won't ever be thinking about withdrawing from, and then ask yourself, can you survive on that 80% or 70% that's left? And fitting yourself into that small portion, I think that would be a good way to go. There are different methods of budgeting. Some people say start with all your costs, cut down costs. Some would say use an envelope that's take all your expenses, put the cash that you need for them in various envelopes. And then once that envelope is finished, you know that you can't spend on that. There are many, many ways. If you look online, you'll find a lot of methods. There are also apps that would help you. You can track it in Excel. I just think really the reason behind budgeting is to control what you are spending, and like Mimi said, is reflecting what you want. Make sure that you are spending money on things that are really important to you. If your health and well-being is important to you, yet most of your money goes into unhealthy things, then you would realize that it's not aligned. You know, final most important thing for me is you must be putting money away for the future, either for future expenses or to create wealth. Why? Because certain things would happen, health emergencies and all that. So you need to make sure that you are covered when those things happen. You would want to build a house in future. You may want to fund a wedding. You may want to pay for higher education. Are you putting money away for those things? Or as money comes, you just spend it because, you think you're earning enough income and money will always be there? The budget should really be a way for you to really assess what you can afford and what you can't afford. I hope that provides some clarity. Prince Adam, do you have any thoughts on what a good budget, what a realistic budget looks like?
I think Mimi and yourself, you've quite um, said a lot. I would just say that the budget should always, there should always be, you should be revisiting it so that at least based on the tracking that you are doing, the individual, you can know some of the things that you can cut down on that can bring in more money for you to channel it into investing into certain portfolios that will go a long way to help you in achieving your financial independence. I think that's what I will add to it.
Great. Thanks for that. Adam, and you?
Oh, Elikem, I think almost everything is being covered. I just think that one thing to also bear in mind when we are budgeting is to make it as flexible as possible. I mean, it's your budget, so it's not as if you want to kill yourself over some of the things. So some one or two slippages might be allowed. Don't be too hard on yourself. But the most important thing is it should be something that is workable and you can work around it and also weave around it. Not be too strict, as if there are any things where one or two issues change, then it affects what you are doing.
Great. Thanks for sharing that. Allow yourself some room for error. Lee, how about you?
You guys have said everything, but I wanted to, since you are talking about budgeting, I wanted to ask, how do you save on let me say, a hand-to-mouth income? What's the best advice you can give for someone who has income that is mostly hand-to-mouth?
Mimi, I guess you want to start.
Okay. So Lee, yes. So for hand to mouth income, we'll look at it from two angles. Okay. Normally, you would hear financial experts say reduce your expenses, and that's because that's the easiest thing to do. You can decide to eat once a day tomorrow, like I'm going to start doing, and that will be fine. However, however, another thing you need to look at doing, so the first side, you need to still look at ways to cut down costs. So since you don't have much money, you have to eat your humble pie. If you have to share, still stay with your parents till you have it all figured out. Hitch a ride with your colleagues. Find creative ways to, reduce your expenses so that you can focus on what is important. But most importantly, you have to start looking at how you can increase your income. And so, what opportunities exist? You have to go to school again. And these days, school doesn't mean MBA or whatever. You can acquire a skill for free. I mean, ALX is. I've seen someone had a computer. What do you call it? Is it computer engineering for free for 1 year? All these opportunities exist. So why don't we take advantage of it? You can even learn a skill on YouTube. People have learned photography, makeup, and all that, just to make extra income. So I think while you cut down on the expenses, you should look at the bigger picture. What skills can you acquire so that you can have access to more funds eventually?
Yep, that's a good explanation. I think it does most of the job. Perhaps I want to play devil's advocate to the thoughts. Like I hear some some people say living hand to mouth, right? I get it. And true, for certain people, they are truly living hand to mouth. Let's ask ourselves how we end up getting into these kind of situations and some of the things that put us in those situations. Some are very emotional costs, maybe taking on some expenses for family members that you shouldn't have, and so now you have a huge bill every month. So maybe you need to learn how to say no to some of these things. That's one way to cut down your expenses. If there are people who are depending on you, maybe you need to start weaning them off. Also, there are people who are earning quite decent incomes and still thinking that they are living hand to mouth. Actually, it's not they are thinking, they are living hand to mouth, even with decent incomes. Why? Because of the lifestyle that they've created for themselves. So we need to monitor our lifestyles. Let's not take on certain habits that are expensive. Don't develop certain tastes for maybe Johnny Walker Blue Label. There's Red Label. It's also fine. You get drunk, fine. That also works. If that one is expensive, maybe some Castle Bridge gin, way cheaper. You understand? So it's all about your tastes too, and you manage your
You
tastes.
wanted them to drink Adonko Bitters, Castle Bridge.
See, I think is it Castle Bridge made in Ghana, or one of those gins is made in Ghana? But just some of the local ones, they can really take you too far. So I would not recommend them. It will over you. But yeah. Anyway, but I think the point is really about what's the lifestyle. Some people are living on certain incomes and trying to live certain lifestyles and think they are living hand to mouth. They are making themselves live hand to mouth. So you need to be realistic about your expenses. Maybe you're not yet at the level of Uber. Maybe still good. Just keep stick to your loading taxi and walk a little. Okay, all right. Let's take another question. This will come into Prince's domain. Prince, are you there?
Yeah, like I'm here.
So, Prince, someone is asking, how do I get good health insurance if I don't work somewhere that provides it?
Okay. All right. So, in the insurance landscape, um, aside you working with a reputable organization that offers health benefits to their staff, you as an individual too, you can also um, consider taking some of these policy if um, you desire so. Yeah. So, for the private health insurance, we have individual products that a person can sign on. So, and this comes with they taking certain information from you. They also have they have a cover, and then they base on your age and then your health information to determine the premium that the individual will pay. So, almost all the private health insurance company have personalized individual plans that um, people or people can sign on to. Yeah. So I think some time ago, Mimi contacted me for one for a retiree. Um, so if you are a person and you are looking at having some of these policies, you can approach any of the private health medical insurance company, and they will provide you with some. Yeah. So depending on your the premium as well, because with the health sector too, the higher the benefit and the premium you are paying, uh, the more services that you are going to get. Yeah, so we have some that differentiated their product based on colors. We have uh, they have blue, they have green, and other things. Others do differentiate it in a different way. Yeah, so you just have to identify your need, and what exactly you seek to achieve from that. You are seeking to achieve with purchasing that medical insurance, and you approach them, and they will definitely give you a good deal. Yeah, and it also operates just like the way. Um life insurances, there's a waiting period. So uh, when we say there is a waiting period, we are saying that we want to qualify your application. We want to get to know that you are not presented us with false information. So we want to, we have what we call a waiting period where um, the insurance company is saying that within this period, you cannot benefit on this policy. So after the period lapse, then you can now start enjoying the benefits on the policy. And this is to ensure that uh, moral hazard is being taken care of. We have people that have diseases, but they will never disclose it when they are purchasing insurance products. So if you have certain ailments and you don't say it, and within the waiting period it happens, then it means that you are not going to benefit from the insurance. Under the within the waiting period, what is only payable when you come to the life insurance side is accidental death. It's only through accident that you can get to benefit from the insurance company. And for the life side too, within the waiting period, there are certain you can't have access to the benefits on the policy until the waiting period is over. So we have some 6 months, we have some 1 year, and it's also take into consideration your age as well. Yeah, your age as well. So um, the higher you are, the more the if you are advanced in age, the more the higher your waiting period will be as compared to somebody who is quite young. Yeah, so there's that opportunity for people to, I mean, get personal health insurance for themselves. And
Okay, okay. At least not all hope is lost if people don't have employers who cover their health insurance or medical benefits, they can have it.
yeah, but elegant,
Yeah,
we
sure.
even have people who might be with organizations that they have medical benefits, but maybe it's not up to the standard that they want it. So they want to always uh, top it up with their own personal um, medical insurance, and that one too is allowed. Yeah, because of individual preferences, you have people that the company is saying that the facilities I work with, um, these are the facilities I work with. Let's say you stay somewhere like, I mean, East Legon, and the facilities that the company is working, you don't have them available at East Legon. You need to pick a car and travel all the way to another location before you can access the facility. So if an individual can say, okay, I want to get another private uh, personal insurance that the facilities are quite closer to me, the person can do that and approach the insurance company. They will do your need analysis and they will get you a premium to pay, and you can select and enjoy those services.
That's a good point. So people who already have coverage through their employers can still have extended coverage, more options if
Yeah,
they
yeah,
go on for their own products. That's great.
sure.
That's great. Okay. Let's take another one. How much debt is too much debt? Okay, or before we take that, Delali, you want to ask a question? Is it related to the insurance question?
No, 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 no. I wanted to be a little bit mischievous. I want to hear Free speak.
You want to do what?
I'm being a bit mischievous. I want to hear Free speak.
Hey, this table that you are trying to shake there. Well, if we observers are curious, so if you so desire, you can raise your hand and let us bring you up stage. So while if we
Eric,
ponders,
every year is not feeling well, though.
oh, she's not feeling well.
Hey,
How,
Prince.
Prince? How do you know
So you
this?
cannot,
Because
talk.
she's on the other hand, she's
Oh,
disturbing me in some
The
other
things are
areas.
sick and somebody talk him.
Not like someone who is not feeling well, cry.
Prince.
oh,
Okay.
Vivi,
Please, you people, in
relax,
fact,
Vivi,
You're
relax.
not minister.
in fact, I encourage you people to advise Ifree. 2 years, Ifree hasn't gone on leave for 2 years. Please, when people are talking to her, advise her. It's good for her own mental health. Else, I'll tell her employer to fire her if she doesn't want to go on leave.
Yes,
Eh,
indeed.
anyway,
Prince, then please send her a hamper. Why?
Oh no, every is being well taken care of, so don't worry. She's fine. We're putting something together for her, so she's fine.
yes, sir. We hear you, sir.
Yeah.
Okay. All right. So to the question, how much debt is too much debt? I see Mimi, you are eager to take this on, and Saram, welcome. Since Saram just came, we can hear from Saram also on this question. So Mimi, go ahead.
Well, I'll just say one thing. I'll leave the rest to others. So, even if you take on a good debt, in quotes, debt that is supposed to increase the asset side of your let me say your net worth. When it comes to your net worth, it's assets minus liabilities. What you owe minus what you own minus what you owe. So even if it's supposed to increase what you own, taking on debt that you can't afford to pay, or that makes you put you in a very tight financial situation, to me is too much. So for example, you take a mortgage for a property, and I think the gearing ratio is like 40%, it's 35-40%, and you have, and the rest of the 60 is something that you can't live off. Like it can't sort out your necessities and give you a little room, then I think you've taken on too much debt.
Okay. All right. So Mimi, can you just clarify for me the last part that you said is? Did you give a ratio or something?
Yeah, I was saying that normally they use a ratio of 40%. So don't give you more than, like, your repayment won't be more than, I think, 40% of what you earn. So if you earn 2,000, your repayment won't be more than 800 cedis. Okay.
Okay.
However, if 1,200, what is left is not enough. Maybe you have kids, they are going to school, you have your rent, and it's not enough to deal with your necessities. Not that you are being how do I put it? You are wasting money or something. Then it's not good debt. Even though it's good debt, sorry, it's not sustainable. And because you'll be forced to do certain things you don't want to do, because the loan you've taken, like, you can't afford your necessities. I don't know if it makes any sense.
Yeah, it makes sense. If you can't take care of your basic necessities and still take care of the loan, then your basic necessities have to take priority, right? So that's an important thing. Also, another thing you want to consider. Oh, actually, let me let Saram. Saram, you've also worked in a normal bank before. So what's your take on this? How much debt is too much?
Hi everyone. Hello, Elike. First, what's the question again? How much debt is too much
Yes.
debt? Okay, then on that front, then I'm aligned with Mimi in the sense that sorry, my background is.
I guess, Saram, we'll circle back to you in a bit then. Yeah. So a point I want to make on this is sometimes it may be even under 30% for you, but you have to ask yourself this. Maybe it's one loan for a car, or it's a loan for school fees or something. Do you still have enough wiggle room such that if you get an emergency, you will still have enough money left aside? That's a question that you want to answer for yourself. Also, you need to think about your peace of mind. We could talk in terms of plain numbers, but some people, it's psychology. The money involves a lot of psychology. Some people just want to be at peace owing other people. So you also need to ask yourself, how much are you at peace owing a bank or whoever you are borrowing from? And that should be a good guide for you. Okay. Does any of our other speakers have any comments on how much is too much debt, or any comments on loans in general?
Elikem, I like the last thing that you said. Personally, for me, even if I can afford maybe let's say 40%, I'll rather go with maybe 10 because I just want as much wiggle room. I want to be able to sleep at night. Like, so I'll go with something much lower. And I remember there was an opportunity to take a loan, and I said I'll pay only 500 cedis. It didn't make sense then, but if it's just 500 cedis, it's coins, not coins. Please let me take that back. It's not really much to me, so I can figure that out. So yeah, for me, I think that's very important, especially those of us who like some, I don't know what do we call it, some security, or just like to feel safe when it comes to money.
Yeah, very good point. Yeah. Well, if you like to have some safety, some security, maybe not too much. Okay, great. Let's move on to another question. And maybe this would be right in your wheelhouse. How much money do I need to retire? And perhaps another question related to it is, when should I start saving for retirement? So how much money and when?
So the amount of money depends on a number of things. It depends on your lifestyle. So I'm sure you can have maybe a general rule of thumb. Today, Sarah put out a FIRE number. Now, FIRE is financial independence, retiring early. And, that rule of thumb, this for early retirement though, that rule of thumb says your monthly expenses times 12 divided by 0.04, and so that's your FIRE number. However, for something more specific, or when you are looking at retirement, you have to look at a number of factors. What kind of lifestyle do you want to have? So let me compare myself with someone like Elikem. Elikem has said several times that he wants to have a Benz and all those things, and I'm sure like to enjoy life. Me, on the other hand, my bed is my comfort zone. So if you take the two of us, it may mean that Elikem may need maybe um 20, 30. Right now that he's in the US, I don't know how much he may need to live that life, maybe $10,000 a month or whatever. I may need 5,000 and I'll be fine. So based on the desired lifestyle, we are able to determine how much I need a month. Two, how long are you going to, how long would your retirement last? Now, it's very difficult to tell whether I'm going to live to 80 or live to 90, but you can just pick, either use the average life expectancy in Ghana or the life expectancy as at 60, and all this is available on the GSS website. And I remember the last time I researched, at 60, life expectancy for females was 16 more years, and 18 more years, sorry, and for males, 16 more years. That means for a female, you could live up to 78. That's at retirement if you are considering life expectancy. And then for a male, 76. Or you can also take the oldest person in your family and just assume that if I should live this long, how much do I want to, how much can I save to live this long? So how long will your retirement last? Also, when would you retire? The earlier you retire, the more money you need. Because if you were retiring at 60 and God takes you at maybe 80, 90, so that's 20, 30 years in retirement. But if you were to retire at 50, given the same life expectancy, that is an extra 10 years. So that means more money. So all these comes into consideration. Also, healthcare costs, which is very important because retirees spend a lot on that. And then inflation must also be considered in this figure. So there's a calculator we use. It's not as detailed, but it can give you an idea, what figure you should be working towards. Elikem, was there a second question?
Yeah, when should we start saving?
Oh, as for the when, dear, as soon as you start working, the earlier the better, so that you can be putting down your coins little by little. What I think though is that we shouldn't limit ourselves to like tier 1, tier 2, tier 3. By all means, take advantage of those so that apart from saving for your retirement, you also reduce your tax burden. But beyond that, if you are interested in business, you are interested in investing in stocks, other things you can do to increase your wealth would help you be more comfortable at retirement beyond the tier 1, tier 2, tier 3 we know. But if you are not doing the basic things, maybe you need to look at these things again. I've seen a number of people not have SNETs, and a number of people you talk to, you realize that the early part of their career, their employer doesn't pay SNET, they don't pay TIET, they don't pay anything. So try and make sure that all those things are ironed out. I know getting a job in Ghana is difficult, and sometimes those are not the most important things, but as much as possible, try and make sure those things are sorted out as early as possible because every month counts.
Every month counts. That's a powerful statement. When it comes to investing, there are certain things you can't control. You can't control interest rates, you can't control risk, but what you can control is when you will put money in and how much you will put money. So do the things within your control and leave the rest to God, as they say. Okay, that's a good point. Then there's a question that a friend of mine since the weekend has been trying to get me to answer all this time. And I was like, you know what? Go and read this book, The Richest Man in Babylon. Start there. When you finish, read The Millionaire Next Door. But this is the question she asked me. All right, I want to get my finances in order. I've seen that my finances are not in good shape. I'm making a lot of money, but I don't have I don't have any investments, nothing. So where should I start? Like, what are the first steps that this person should take on? Who would like to get us started with this short list for anyone who is thinking of where to get started? Okay, I think I would like to start with a quick rapid fire 3 things that we learned from the book Damn Things Smart People Do With Their Money. And then I'll pass it on to Adam to continue. So it said 3 things. First is get an emergency fund. Build a fund that is worth 3 to 6 months of your expenses. Right? You could be earning, let's say, 5,000 after tax. You are earning 5,000. That's fine, but you know that you spend only 2,500. So that 2,500, make sure that you multiply that by 3, and you have what, 7,500. Build an emergency fund up to 7,500. You won't get it all in there at once, but if every month you put some thousand cedis towards it, but within 6 months you will get to a point where it's sufficient. If you have some windfall money, some loose money that you weren't expecting, you didn't plan for, you push it into that, and then you build that emergency fund. That's great. Second thing is you need to do is, she said, pay off debt. That's what the author said. Pay off debt. I would just want to caveat it. We a couple of moments ago, we were talking about how much debt is too much debt. You need to check what is sustainable. Some debts are too expensive. So those of us in the US, there are credit cards that charge exorbitant interest rates, and so you want to cut down on those. My aunt just called me today. We're talking about some options for financing something, and she was like, I have 1 credit card. That's good. I should get 2 more credit cards, but I should always make sure that I spend only up to 30% of the balance. So if I'm allowed to spend $1,000, I should spend less than $300 on each card just to build my credit. Right. So these are some of the things you want to think about. If you have any debt, find out which ones are too expensive, and then come up with a plan to pay them off realistically. And then you can keep the credit cards or any debts that's sustainable based on stuff we spoke about earlier. So the second thing is debt. And then the third thing is save towards your retirement. Mimi just spoke at length with that. But I'd just like to add on that usually you get a tax benefit with saving towards retirement. So in Ghana, we have the tier 1, that's SNIT, tier 2, and tier 3. Tier 2 and tier 3 are private pension, are managed by private pension fund managers, but the deductions are before tax. They reduce your tax burden, as Mimi said earlier. So you want to take advantage of that. I think if you take full advantage of all three tiers, maybe correct me, the number is it you can put away up to 36% of your income before tax. Is that right?
35.
Up to 35 of your up to 35% of your income before tax can go towards your retirement. So you want to take good advantage of that. If you're in the US, look into the IRAs, 401ks, those kind of pension payments. These are good ways to start. And then let me pass it on to Adam to talk about other things you can do.
Okay, Edikem, thank you. I think how I would also look at it is to start from a point of trying to put your finances in order. I think one of the very good things you can do is to budget. Okay, normally when people don't have their finances in order, it means they have no idea where the monies are passing and or how they are coming in and going out. So a budget will help you to be able to know exactly how much is coming in and how much is going out and where is it going to. Then when you can, so I would advise that probably she embarks on an exercise for about a month, okay, of tracking all income and expenses, or probably even 2 months. Go as long as she can go, of tracking all the monies that are coming in, where they are going to. Then you see that gives you an idea, and you are able to see clearly. You ask yourself that this amount I'm spending on this, is it worth it? And you see that whole process helps you to evaluate where the monies are going and the importance to your life's goals. Okay, so once you are able to align where your money is going to your goals that you have in life, which of course one of the goals that is coming up now is that I want to get my finances in order, then it will help you to be able to start to put monies where they have to go to. Okay, so once she's tracking the monies, then she's able to make a better decision that no, let me cut down on this, let me increase this and all that. So putting that whole budgeting process, going through tracking the expenses, starting from somewhere, little goals, just pick them one after the other. Like you said, the emergency fund is a very, very good one. One easy way of doing that is, let's say, how about start with, I want to save 1 month of income, or 1 month worth of expenses. So that's your first goal. Once you achieve that, it spurs you on to try to do the second one, the second, and then the third. And before long, you realize you have that 6 months buffer of emergency funds that you like is ideal, that everybody should be having. So I think that is also a good way to be able to track and then bring back your finances under control. And then closely linked to, once the emergency fund starts, you are done, you can then move on to start some investing. So that the good thing about building an emergency fund before starting with the investments is that when you get stuck along the way in need of some amount of money, you don't have to go and disinvest to be able to handle those things. So it's one of the good things to do, start an emergency fund, but through the budgeting process, and then after that, you can start building your own investments from that. That's what I'll add to what Abikem has said.
Those are powerful points you mentioned, Adam, and I just want to harp a little more on the latter part of what you said. I've spoken to people who said, "Oh yeah, I was in good financial shape until an emergency happened." Desmond once tweeted something, and a lot of us say it. Some people are just one crisis away from financial ruin. And if you have insurance, if it's a health related thing, make sure that you have insurance. If it's your car, make sure you have proper comprehensive insurance. Protect yourself. Insurance is a good way to protect yourself from some of these problems that may come up. And then also, if you have your own emergency fund, that makes you not have to break your investment pattern. It's like the gym, and I'm looking at Mimi as I'm saying this. You build a habit to a certain point, but once something interrupts it, it's so difficult to get back to it. So having an emergency fund, it has way more benefits than just putting the money away. It has a lot of psychological benefits for you. You don't go breaking investments. You can let the money do work for you over the long term. So I strongly encourage that. Great. Mimi, Sayram, any other thoughts on next steps, that early steps that people can take?
I think those are some great points that have been shared. I mean, a lot of the time people jump into investing without taking care of the basics, and emergencies really do happen. So those are great points. And to add with, in the financial planning process, you also want to make sure the person sets goals, right? And your goals are basically what you want to acquire, achieve, do. So this is when someone sits down and determines what they want out of life, and then of course you prioritize it. So number one, number two, like adding to it, you should also have your list of priorities, or let me say your goals that you want to achieve. Once you have that, then we can now look at what vehicles, what investments can we, start to be able to achieve those goals. Because a lot of the time, people invest for investing sake. And to me, based on my experience, I don't think it's the best way to go, because anything at all will come up, and because you don't have a reason why you are doing it, you stop it to go and do something else, just to realize years later that you are missing out on your ideal life because you didn't sit down to really think about what you want. And so the goals are important. And now that you have all these in place, it's important to also know your risk profile. And your risk profile will take into consideration your risk tolerance. That's whether you can tolerate risk, your capacity. Sometimes you can tolerate risk, but you don't have the capacity to do that. Maybe you have kids in school, you've not really built your investment, so going to do stocks or something may mean that you may not be able to meet certain important short-term needs. So you should have the capacity to be able to take on that risk. There's a last one I can't remember in the risk profiling. I think risk capacity, risk tolerance, or something. If you know it, you can remind me. And then you also want to look at your objectives. We've already spoken about that. You also want to look at how long you want to invest for. And, as I said, sometimes talk to people, they just say, I just want to invest. Is it 1 year, 2 years? They said they don't know. And most of the time, these people come 3 months later that maybe they have an emergency and they need the money. So really sit down and think through all these things before you choose an investment. Otherwise, you choose something that is not appropriate and you may pay for it. Because if you are withdrawing before time, you may pay a penalty, or you may be forced to withdraw at a time that is not does not work for you.
Okay, great. You don't want to have to pay some of these penalties. So, yeah, these are things that you want to consider. Great. Thank you, Mimi, for those points. Are there any other points as we start to wrap up today's Ask Us Anything session? Or do you know of any nagging questions that people have been asking you that you feel like you should put out there and give them an answer once and for all?
I'm sorry, Serum has also added automate your investments.
Oh, okay. Yeah, that's true. Yeah. Automate them by way of doing a direct debit that makes, if your employer can move the money to your investment accounts before they send you your portion, or if every month on a specific date money moves from your bank accounts to your investment accounts. Those are some of the ways you can automate it. You can even link it to your mobile money, so that money moves from your mobile money account to your investment account. Just talk to your investment house and they'll show you the way they can automate it for you. saves you a lot of stress with having to think through some of these decisions. Because if you have to think through it, you may end up delaying and just not doing it. Then by the time you see, the money has turned into kebab. Okay. All right. Yeah. So to our speakers, anyone have any other nagging questions that you feel like they should be answered? Okay. In the absence of these questions, and since Efriye said she wouldn't come and speak for you to hear her voice, well, we can call it a night then. In case you've not followed us already, follow us here on Twitter, Facebook, and Instagram, and especially go on Instagram and follow Investment Friend. It's here on Money Convos. We just have candid conversations about money, but the actual work to get you towards financial independence is done with Investment Friend, where they consider your personal situation and come up with ideas for you to put yourself in order. We just spoke about tips of how you can get started on your financial journey. Investment Friend can help you along this journey. So go follow them on Instagram. All right. That's investment_friend. Okay, guys. Thank you all so much for making the time this midweek. And I hope to catch you again same time next week. For me now, the time difference is now 4 hours. Last week it was 5 hours, but now it's 4 hours. So I'm getting closer to you people. Anyway, all right. Take care. Talk to you next week. Bye.
Thank you for taking the time to listen to our thoughts. I hope you learned a thing or two and start practicing. Don't forget to follow us on Twitter, Instagram, Clubhouse, and Facebook. And subscribe to our YouTube and podcast. Do tell a friend about Money Convos so we all become wealthy together. Talk to you soon. Bye.